In the world of energy trading, few markets are as dynamic and closely watched as Brent crude oil. Its price movements can send ripples across global economies, influencing everything from gas prices to geopolitical strategies. And right now, there's a fascinating technical setup that could shape its near-term trajectory. But here's where it gets intriguing. What happens next isn't just about supply and demand. It's also about understanding critical support and resistance levels. Let's break it down step by step so even beginners can grasp the nuances. Recently, Brent crude oil found itself bouncing back from a key support zone, a region between $66 per barrel and the lower daily Bollinger Band. This area has proven its significance repeatedly since June, acting as a floor that prevents further declines. In technical analysis terms, this is no ordinary support level. It's been reinforced by something called the 61.8% Fibonacci retracement level from the prior impulse wave, labeled C. For those unfamiliar with Fibonacci tools, they're widely used in trading to identify potential reversal points based on mathematical ratios derived from the Fibonacci sequence. Essentially, these levels act like invisible magnets for price action. What makes this setup particularly compelling is how strong this support at $66 appears to be. Not only does it align with historical turning points, but it also coincides with an important indicator, the lower Bollinger Band, which many traders monitor closely. When multiple factors converge like this, it often signals a higher probability of a bullish reversal. Translation: the odds may favor an upward move in the coming days or weeks. So, where could Brent crude oil head if this bullish momentum continues? Analysts suggest that the next major hurdle lies at the $68 mark. Interestingly, this level isn't just any random number. It served as robust support back in July, before flipping into resistance during subsequent price dips. Resistance levels, in simple terms, are price ceilings where selling pressure tends to emerge. If Brent crude manages to push through $68 convincingly, it might pave the way for even higher gains. But here's the part most people miss. While technical indicators provide valuable insights, they don't exist in a vacuum. External factors such as OPEC+ production decisions, geopolitical tensions, or shifts in global demand can always override these patterns. That's why seasoned traders never rely solely on charts. They combine them with fundamental analysis and real-time news updates. Now comes the controversial question. Should you consider buying Brent crude oil at current levels? On one hand, the technical picture looks promising, especially given the confluence of support at $66. On the other hand, energy markets are notoriously volatile, and unexpected events can quickly turn a seemingly solid trade into a losing proposition. Trading contracts for difference CFDs, which allow speculation on price movements without owning the underlying asset, carries significant risks, including the potential loss of your entire investment. Before jumping in, ask yourself, do you have a clear risk management plan? Are you prepared for sudden swings in either direction? These are questions every trader should answer honestly. And let's not forget, what works today might not work tomorrow. Markets evolve constantly, and staying ahead requires adaptability. We'd love to hear your thoughts. Do you agree with this bullish outlook for Brent crude oil, or do you see reasons to be cautious? Share your perspective in the comments below. We value diverse opinions and lively discussions.